Hi there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka Pal along with my co-host Snehi. Snehi, what do we call it? It was a week, the kind of levels that we've started, we're about to close. We've just closed near that point only. If you look at Nifty, just nearly 200 point of range within the whole week. The week which saw some recovery also coming in. Of course, a lot of downside pressure, global news, but then Nifty saw a range of only 200 points within it. And we are closing close to those levels only where we started the week off. And the levels at which Bank Nifty kicked off, we have almost close to those levels only. Throughout the week for Bank Nifty, the range was such a tight range, just 550 point range. Nifty did manage to close just near to 22,800. What do this mean? We'll understand it from Rajesh Palvia, who will give us a technical view on the indexes also. But are we out of the woods since we have not decisively break down below 22,800? What do this mean? Are there signs of some recovery? Should we keep some hope? We'll find that out. But yeah, the whole week we've seen only and only Trump talking about tariffs, and that has threatened not just Indian market but globally all the markets. And the second threat, which could possibly actually weigh on the investor sentiment, was today the kind of CPI figure which has come in from the Japanese market. Maybe the yen carry trade is back or not. So this was the dominated news flow which actually kept us busy throughout the week in finding out which sectors will be immune, which sector will have more of the pressure.
Absolutely.
And this is what the week was.
But some big highlights coming in from the week, because even though the week was very range bound, like you've seen when it comes to the Nifty, you've had the metal index that has done very well for itself. In fact, it's touched a 1 month high amid a week like this. So that is surprising. It's a top sectoral gainer that was led by EPL, Apollo, Nalco. All of these have done well. Nifty, Energy, Realty, PSU banks have all hit 1 year low, but on the bright side, all of these indices have snapped their 2 week losing streak. So these are a couple of indices that have ended the week in the green. You have Metal, Energy, PSU Bank, Realty, and overall the Nifty mid-cap has also ended the week in the positive territory. So that is something that is looking good for our street. On the flip side, what's not done well at all is the Nifty Auto Pack. Of course, like Priyanka mentioned, that reciprocal tariff sword that's hanging on our head right now has done very badly for the Nifty Auto Index. Auto languishing, pharma, FMCG, IT. Rather, in fact, what's interesting to know is all three defensives are amongst the top 3 losers when it comes to this week's action, because you have a cut of 2% on pharma, 2% and 2% likely 1.8% on Nifty, IT and FMCG as well. So all 3 of these have not done well at all. So that was on how the week has shaped up in terms of moves coming in. Nifty 50 lower by 0.6 for the week. Mid cap in positive territory, and small cap also 1.5% uptick coming in. Just a few more highlights. The Tesla foray into Mumbai and Delhi is something to watch out for. Maruti Suzuki reducing its BEV launches by FY30 from 6 to 4 on the back of this Tesla foray was also important to watch out for. So these were some of the big things that happened over the course of the week. Of course, dollar index and crude volatility also must be something that should be kept in mind. But on that note, let's welcome Rajesh Palvia, Head of Technical and Derivative Research at Axis Securities, on board. And along with him, we also have Mayuresh Joshi, Head Equity at MarketSmith India, joining us for a comprehensive view on the week that has been and how to navigate the volatility that looms at large ahead of us. Rajesh, exactly on that note, I'm going to come to you first. Give us a brief of what you have made of the week that went by and what kind of levels you are spotting for the benchmarks heading into next week.
Good afternoon, Sneh. Good afternoon, Priyanka, and good afternoon, Mayuresh. So looking at the behavior of market, it was clearly in the range only, but we have seen swing in both the indices on the both side of throughout the week. But on a closing basis, week on week, it's a kind of muted kind of action. If we compare week on week perspective, Nifty has formed a dozy kind of candlestick formation on a weekly chart, as well as the Bank Nifty also formed a dozy candlestick formation on a weekly chart. So again, this clearly indicates that there is an indecisiveness amongst the participant, and that the clear behavior we have already seen in the market itself, that after defending the 6th time to 22,800, again there is no substantial pullback we are able to make it for Nifty. So I think coming week is going to be very interesting, whether we start the week below 22,800. If it's happened, I think then follow-up selling may extend further from the current level, and then immediate the next level would be 22,650 and 22,600. That level needs to watch as the immediate support area, because we are moving towards the expiry for this month in the coming week. So I think uh, that area is having major put based concentration. So I think that may act as a support area. On the higher side, 23,000, 23,100 are the major supply zone. But until market not crosses those level, I think trend is likely to exhibit on the weaker side. Only sell on rise would be the clear strategy till we are not crosses about 23,100 for Nifty. Even for Bank Nifty, until the Bank Nifty not crosses over 49,800 on a closing basis, I think here also trend is clear that whatever minor pullback near to those level should be used as a shorting opportunity in the Bank Nifty. As we have closed around 48,900 for coming week, the important level to watch for Bank Nifty is 48,700. If we breaks below those level, then we may see further more continuation of supply pressure towards 48,200. Also, that level can be seen in the coming week also. So coming week is very interesting, and I think the important level which we tried to protect multiple time, again on a closing basis, market has closed below that level. So I think uh, that may create furthermore unwinding trade in the coming week.
Right, this is a cautious view for sure, Rajesh. I thought you would say that 22,800, at least we've not, broken down it decisively. So maybe there is some light at the end of the tunnel, but that's okay. Let's bring Mayuresh also in the conversation. Mayuresh, Rajesh mentioned it's a very interesting week which is about to come. Even I have a question in that context only. Is this going to be an interesting week? Because the kind of money move we've seen moving to emerging markets like China, despite its ailing fundamental, has still given 30% of the return. FI is going in there. There is also one kind of view that, the tariff trade war triggering the global recession could be at the tail end risk. Maybe US exceptionalism is also at a peak. So if given these kind of arguments, maybe it could be an interesting week. Shouldn't we think of a recovery or a rebound from here?
Afternoon, Priyanka. I think nobody knows for sure. I think not even Trump on what is probably going to happen or what he's going to say as a rhetoric. But having said that, I think all these elements are creating confusion for the markets. And markets don't like uncertainty, I think, and that's why the markets are responding the way it is. Obviously, I think earnings have been soft in the Indian context. Broader markets overvalued, where the correction has been even starker. And therefore, I think the hope now is based on the earnings recovery for for the Indian markets. The hope again with the tax cuts coming through the first quarter of the next financial year and the first half itself. How does this play on consumption? How does this play on private investments and private capex? That is what the markets would ideally like to watch. And whether you're going to see some element of earnings recovery based on these factors put together. The second element is a few data points that we were mapping at our end, Priyanka. One obviously has been the bond yields and the earnings yield spread. That has come down to almost 2%. And historically, we've probably seen the earlier corrections. It probably then is some indication that the markets might bottom out. So I think this is the first parameter that we are looking at in terms of if this happens. I think the next few weeks or the next few months, there should be a bottoming out process happening for the Indian markets. The other element also is the Nifty 500 stocks. When 15% of the stocks are only trading above the 200-day moving average, this is a rare occurrence. Even the COVID fall or the fall in 22 or the 2014 fall had similar such instances where after a few weeks and months, the markets probably plateaued out and started recovering. The dollar index is probably capping out as well, in our opinion. And therefore, I think the uncertainty related to tariffs, the uncertainty related to the yen trade as well, might still keep the dollar index a little bit volatile. But if it probably troughs out or tops out, I think it's an inverse relation with markets as well. And last but not the least, I think the yen carry trade itself. If there are further rate hikes, I think the markets is gestating that. But if there is an aggressive rate hike, obviously that becomes a risk for the market because that is detrimental to not just emerging markets, but to the NASDAQ index as well, as historically seen in the past. So there is a lot of uncertainty. But the good news, Priyanka, is that the Champions Trophy is on to probably help you relieve your worries.
Thanks for that view coming in. Also, Irish, I just want to come back to you quickly for a quick FII DII view because I can't help but notice I have the 4-month data in front of me, and for FIIs, you have a 1.2 lakh crore withdrawal coming in. On the flip side, if you see the DII movement, it's an infusion of 1.26 lakh crores coming in. It's more than what the FIIs have withdrawn. At least even if you see this on a year-to-date basis, that stat continues because the DII contribution to the system has been more than what the FIIs have withdrawn. Do you still believe that this is an indicator that there is still confidence of where the equity markets are headed? And despite the correction that we've seen, despite some of our indices also entering the bear territory, do you believe that this positivity, or rather this optimism that retail shareholders have in the market, is something that we could continue to see ahead as well?
And the resilience continues. You're absolutely right. I think, yes, there have been redemption as far as SIPs are concerned. There have been withdrawals, but monthly SIPs in terms of fresh additions and continuation have also continued. So I think kudos to the retail investor, because I think the compounding element of markets over 3-4 years is something that retail investors have probably now understood pretty well. Obviously, I think the last 2.5 years have been astounding returns from a market perspective. And that is where I think retail investors should also start moderating their expectations. I think a fair bit of an estimate is a 15-16% compounded return that the markets can probably deliver. This year probably looks a year where investors might need to moderate their return expectations based on all these facts and figures put together, both on the domestic front as well as the global front as well. But generally, I think if you look outside the US, I think the next best played market is India. Whether you talk about political stability, where you're talking about expectations of government capex, our fiscal roadmap, expectations of an earnings recovery. And if the market further, our own sense is that valuations again become not too cheap, but again, they have probably entered fair value, which is again a very good sign compared to the rest of the emerging market.
So we've some packs, yes, but then there is another part of argument also. Maybe we are still a little far from the fair value, but point taken, Mayuresh. I'm just trying to gather some more positive points here, Rajesh, so that I hear some positive news from you also. Maybe some indicators which can actually create some hope, some optimism. You know, because the dollar index is below 107, one good sign for emerging markets. Brent crude is at constant, steady at those levels only, in that range only, below $75. This again happens to be a good reason for emerging markets. So just trying to gather some of the reasons where, if in case a bounce back has to come, will that appear? Will that come in those sectors which were hammered the most, like pharma or auto and metals, of course? Rajesh?
So, yeah.
Yeah.
So these are all positive, but again, the major negative which is playing at this moment, that is, FI selling, and despite DIIs and retail participation is trying to defend those supply pressure, they're not able to recover. If the intensity of FI supply keeps on continuing on this manner, so I think it will take time to recover. Though markets are in oversold trajectory, as Mayuresh was also indicating that, NSE 500, 200-day stocks universe, that is almost at 14%. So that's a sign of oversold trajectory. We are in highly oversold trajectory, and there has to be some pullback. But still, till FIs are not, stop on the, supply side, market won't be able to recover. On the higher side, till the Nifty not crosses some threshold level like 23,300, 200 zone, I think confidence and sentiments will not come on the buying side. Some of the pockets have recovered in last couple of days, like power as well as the metal. These stocks have recovered quite well. Even we have witnessed some recovery in mid cap and small cap space also. So that clearly shows that, yes, at oversold trajectory, investors are, trying to buy the stocks where are the, attractive price points are available. But, large cap universe are still, under pressure, and there is no as such substantial recovery or leadership from any of the major sector is, showing any kind of, strength here. And the kind of announcement which we are getting on a daily basis from USA, that is again, creating some kind of, panic or uncertainty. Again, today we have seen, some EV new policy can be there. So I think we have seen a hit on the Mahindra and Mahindra. So I think till this uncertain phase is going to remain in the system, nobody is going to venture out to buy in a big way. Everybody is buying very thin in this market, and market will take time to recover. And maybe I think maybe some consolidation will be there in the system for some more couple of weeks. Then market will find some positive. As you have already mentioned, lot many positive has happened in last couple of weeks, but still market will thumbs up only once this FI supply pressure will subdued at certain level.
Okay, Rajesh, so that's the view coming in on where we are headed. But Mayuresh, on that note, only extending that question, which sectors or which pockets in the market are looking like safety nets right now? Because the kind of correction that we've seen, and if our viewer is a retail investor who's watching the show and now wants to make a fresh entry into the market, given the correction that we've seen and now feels confident going ahead, A, would it be the right time to do so? And B, if yes, then which would be the sectors that you are positive on?
So our sector rotation graph, Panure, which is our institution software, is probably throwing up rural themes. And within rural themes, the consensus that is coming, at least at this juncture, with expectations of a good Rabi season, expectations of La Nina conditions, which means that good monsoons will probably happen in the Indian context and a better Rabi season to follow. Agrochemicals is one space which is probably looking a tad bit better placed as we speak. The second space that is coming up into our sector rotation and industry classification graphs and groups as well is hospital stocks. Our belief here again is that the consistency in terms of earnings delivery will largely not be, it will largely not be concerned with what is happening in the globe. And a large element of the additions that they'll be doing in an asset-light model, as these new hospitals mature, as the new bed additions also have some element of maturity as far as the average revenue per operating bed, the average length of stay is concerned as two key parameters. The earnings pedigree for a few of the hospital stocks might actually show significant signs of improvement. So again, I think we're being very, very selective. Some sectors that are getting thrown up at markets with India are agrochemicals, hospital names, and a few banking stocks. Our belief again is that incrementally deposits should show significant amount of growth. The CASA depletion or the acceleration that we've probably seen should start normalizing, and therefore I think a lot of parameters that you are looking at should remain normal as well. Should start normalizing for the sector. So being selective on rural themes, selective in terms of domestic themes, and that is where our belief is that the next couple of quarters should at least play.
Right, so these are the sectors that you are bullish on, but let's understand from Rajesh his top two picks for the coming week also. Rajesh.
So first one is SBI Life. Stock is consolidating since last couple of week, and looking at the near-term, short-term structure, we believe that this stock may extend its gain. Possible upside target we may see towards 1540. So one can buy SBI Life with stop loss of 1455. The second stock on the buy side from the metal space, that is Hindalco. Very strong buying action since last 4-5 trading session, and whole metal pack was indicating the same behavior. So we believe that Hindalco may continue furthermore upside. The upside target we are projecting towards 680. On the downside, the stop loss is around 637. And one short idea, that is on pharma space, Lupin. So that stock can be looked at for on the shorting side, as structure is already weakened, and the way short built up has been there in the system. We believe that Lupin may extend its gain. So on the downside, 1840 would be the next target. One can go short with stop loss of 1947 in Lupin futures.
Interesting trades coming in, long on SBI Life and Hindalco and short on Lupin. But on that note, Rajesh and Mayuresh, thank you so much for joining us. We'll let you go and we'll wrap it up on this edition of Your Trades. From Priyanka, me and the team that put this show together, thanks so much for watching.